Welcome to the Explainer. Today we're diving into Quant Network and its token QNT. And what's so interesting here is that you really have to look at two completely different sides of the same coin. On one side, you have this incredibly powerful enterprise-grade technology, and on the other, you have its wild, volatile life out in the crypto markets.
So think about one of the biggest challenges in finance and tech today. How do all these legacy systems, the ones that run our entire global economy, how do they talk to the dozens of different incompatible blockchains out there? It's a huge problem. Well, Quant Network doesn't just think it has the answer. It's actively building it.
All right, so here's our game plan. We're going to start with the core tech and the really unique role that the QNT token plays. Then we'll get into its very real connections to big finance, try to decode what's going on with the price, and finally look ahead at the risks and the potential catalysts on the horizon.
So first things first, what exactly is Quant? Now, it's super important to get this right off the bat. It is not another blockchain trying to be the next Ethereum or Bitcoin. Not at all. A better way to think of it is like a foundational operating system that just sits on top of everything else. The crown jewel of their whole operation is a product called Overledger. And basically, its job is to be a kind of universal translator. It lets huge corporations, banks, even governments build these powerful applications that can run across multiple blockchains, all at the same time through one simple gateway.
Okay, so that's the tech. But how does the QNT token actually fit into this whole enterprise-focused system? And this is key. It's not used for paying gas fees or transaction fees like most other cryptos. Nope, its job is totally different.
The first thing you have to understand is its absolute scarcity. There is a maximum supply of just over 14.6 million QNT tokens. That's it. Full stop. No more can ever be created, which seriously makes it one of the rarest digital assets in the space.
And that scarcity gets amplified by its main purpose. So check this out. When a big company pays for a license to use Overledger, Quant's treasury takes that fee, in regular old dollars or euros, goes out onto the open market, buys QNT, and then locks those tokens up for the entire 12-month license period. This process literally pulls tokens out of circulation.
And someone on Reddit just nailed this with a perfect analogy. They said to think of money as a flowing river. The yearly license lockup is like a beaver building a dam. As more and more companies buy licenses, the dam gets bigger and bigger, and the pool of available QNT just keeps shrinking. It creates the structural, constant buy pressure that's baked right into the business model.
All right, this all sounds great in theory, right? But is anyone actually using it? Let's take a look at how this translates into the real world. Because Quant isn't just a white paper with big ideas. It's already working with some of the biggest players on the planet.
I mean, we're not talking about small startups here. We're talking a strategic partnership with Murex, a leader in capital markets, a collaboration with a tech giant like Oracle, and direct involvement in these super high-level central bank digital currency projects, CBDCs, with the Bank of England. They are smack in the middle of where traditional finance is meeting the future.
And this quote from the founder, Gilbert Verdian, really gets to the heart of their entire strategy. They're not trying to come in and just rip out and replace the multi-trillion-dollar systems that already run the world. No, their focus is on upgrading them, making them programmable. And that is exactly the kind of message that big institutions want to hear.
Okay, so you've got amazing tech, huge partnerships, a shrinking supply. The price must be going to the moon, right? Well, this is where we have to flip the coin over and look at the day-to-day reality of the crypto markets.
If you look at the technical charts, they're basically telling two different stories at the same time. On one hand, you've got some short-term momentum indicators, like the MACD, that are looking pretty positive. But on the other hand, QNT's price is getting completely dragged around by whatever Bitcoin is doing, and the overall market fear is just putting a heavy lid on any potential rally.
So for anyone watching the charts, analysts are zeroed in on a really tight price range. Holding that support level around $70 is absolutely critical. A decisive break above that $75 resistance, especially on high volume, could be the big signal that the bulls have been waiting for.
So all this brings us to the future of Quant. Let's wrap things up by weighing the potential headwinds they're facing against the really powerful tailwinds that could push them forward.
The biggest risks really come down to execution and competition. These enterprise sales cycles are notoriously long, and those pilot programs they have absolutely must convert into large recurring licenses. But the tailwinds are just immense. The global push towards CBDCs and that multi-trillion-dollar trend of tokenizing real-world assets, Both of those play directly into Quant's core strengths.
And at the end of the day, this leaves us with the central, fascinating question for Quant. Its technology is built for the slow, steady, highly regulated world of enterprise finance. But its token lives in the fast-paced, highly speculative, and, let's be honest, often irrational crypto market. So which of these powerful forces is ultimately going to win out? Well, that is the multi-billion-dollar question that everyone is watching.